What if Donald Trump wins in November? Will his win tank your retirement portfolio? What are the implications? Well, in this video, we're going to talk about those implications. We don't know whether he's going to win or not. It's a very tight race. But I think it's important we begin thinking about and talking about what the implications might be. So in this video, we're going to talk about some of the key areas that you need to be thinking about as it relates to your retirement portfolio. Now, to get a sense for the impacts a Trump presidency would have on Canada, the Canadian economy, and our capital markets, really all we need to do is go back to 2016, because 2016 gives us a pretty clear idea as to what the mandates are going to be, and also looking at what he's saying right now. So in his first term as president, it was about protectionism. It was about tariffs against China and other trading partners. It was about a whole bunch of themes around Buy America, Make America Great Again, trying to put in place policies that would bring back manufacturing to the U.S. And his pick of J.D. Vance as part of his ticket really underscores the continued focus on those kinds of policy positions. So the question is, how will that impact Canada? Well, I think the impact is going to be mixed. I think certainly in a tariff-driven policy environment, that will have some negative impacts on the global economy and on global trade. But does Canada have any special leverage it can assert in the midst of protectionism and tariffs? So if Donald Trump and his administration start hitting various trading partners with 10% or more tariffs, obviously that would be a negative thing for Canada, a negative thing for our markets, and negative for all of our portfolios. Well, first of all, there is a little bit of leverage that Canada has. 75% of our exports go to the U.S. In 2022, that was $590 billion worth of trade. The other thing is that as Trump likely focuses on China and tries to get the trade imbalances dealt with more effectively, and as tariffs hit there, Canada will be in a good position. First, Trump will want to protect the trading partnership that he has with Canada as he tries to punish China with tariffs. As well, he'll want energy security and access to our commodities. So I think in the end, although it's going to be a mixed impact, I think Canada is in a really good position to navigate some of these trade tensions going into 2025, if in fact Trump is elected president. The next area we need to really touch upon is the aspect of our economies, which are really interlinked, and that's globalization. A Trump administration is going to have a negative impact on this grand experiment that has been very good for many economies that we call globalization. So what kinds of policies would the Trump administration pursue, and what would the ripple effect potentially be economically and from a capital market standpoint? Well, first of all, once Trump begins to ramp up tariffs, we're going to experience tariff retaliation. That's just going to create more friction within the global economy. It's going to make it more sluggish. It's going to be more difficult for it to be behaving in productive ways. It's going to increase costs. Likely, there'll be more protectionism than we saw in the first term. I think that's something that's pretty clear given the rhetoric that's coming out of the Trump campaigns and a lot of his policy pronouncements. And of course, that's going to negatively impact the global supply chains, increase costs, and drive up costs and inflationary pressures potentially. So there is a silver lining in some of this, but definitely a Trump administration will have some potential downsides, both in terms of the trade tensions and globalization and the frictions economically that could drive down profitability and increase costs. Now, I've talked about some potentially negative aspects to a Trump administration. What about capital markets? What about our portfolios? Are there any things that could be encouraging or areas that we could exploit as retirement investors as a result of the Trump policies that might be initiated if he was elected? Well, there were 5 items that came to mind for me when I was putting together this presentation. So first of all, there would be further reductions to corporate tax rates. So Trump was trying to do that and began reducing corporate tax rates in his first term. And there are some discussions that he might even bring corporate tax rates down to the 15% level in the United States. Now, that will be very good for U.S. corporations, and that will boost markets. But it will be a challenge for Canadian companies. And so we have in our country an expectation of tax revenues coming both from us personally, but also from corporations. And we currently have a government that really doesn't have any appetite to reduce corporate taxes. but they may be forced to do that as a result of policy positions taken by the Trump administration. If they begin dropping corporate tax rates, there will be a flight of capital away from Canada if the administration here in Canada, the Liberal government and potentially a Conservative government, if they're elected, comes into power. I think they'll be forced to begin to move in the direction of reducing corporate taxes if, in fact, Trump does that. So a big theme in Trump's first term was deregulation, getting rid of regulations, allowing businesses to become more productive, more efficient, and get projects turned around more quickly. Now, that's controversial. I mean, it comes down to where you land on regulation and regulatory oversight and whether you can trust businesses to do the right thing. But there's no doubt that from Trump's standpoint, he feels that regulations handcuff corporations, reduce productivity, and reduce economic growth. So you're going to see deregulation as a really big theme in a Trump administration. And then as part of this discussion, likely Keystone Pipeline will be back in play. And that's a good thing for Canada in terms of our energy sector. So when it comes to Trump as well, there's a general pro-market perception for Trump. So when you combine all these things, there could be an expectation that the U.S. market could do very well. U.S. corporations could get a boost. And you have to counterbalance that with the fact that there'll be maybe more sluggishness in terms of global trade, more friction around tariffs and other battles that go on from a trade standpoint. So it's definitely mixed. So we're going to talk about one more topic, and then I'm going to give you some bullet points about how to make use of this information. Now, you can't talk about economics and the markets without talking about inflation. So clearly, one of the things that I've said in this presentation is that some of the policies, tariffs, pushing back against globalization, that'll lead to increased costs. It'll hurt supply chains. And so that could be inflationary in terms of the cost of goods, as an example. On the flip side, some of the policies that Trump will initiate could be good for capital markets, in particular U.S. companies. Will those productivity gains counteract some of the inflationary pressures from those other policies? We just don't know at this point. Now, as investors, it really puts renewed focus on the U.S. market. So if Trump pushes these policies through and tries to supercharge U.S. corporations through deregulation, decrease corporate taxes, putting more money in the consumer's pocket through personal tax reductions, and putting money in the hands of people to spend that, then that for sure will have an impact that will be positive for the U.S. economy. On the Canadian side, it's really a renewed focus on having companies in your portfolio that will benefit from those policy positions. Now, Canada is in a good spot from a standpoint of being a strategic partner for the U.S. If the U.S. administration, Trump administration, alienates trading partners like China, as an example, then they'll be very focused on trying to have good trading relationships to countries like Canada. We have the commodities, the oil and gas, and other infrastructure that they're going to need. Anyway, I hope that you found the video helpful. This is a very uncertain world. Who knows whether he's going to win or not, but it's important to begin thinking about the potential ripple effects of a Trump administration. Be sure to hit subscribe if you don't want to miss future content. Go to the show notes to find out how you can get access to a complimentary retirement planning gap analysis. Anyway, wishing you all the best in your retirement planning journey. You take care. Bye-bye.